Greetings, members one and all of the Salivation Nation. A booming economy could mean higher gold and silver prices. And that sounds like sort of the antithesis to what we usually hear. And in some cases, I think mostly that would be. But if the economy continues to improve, I think we're going to find gold and silver prices may go up. And there's some data to actually kind of back that up. And that we'll kind of explore very, very briefly. But nonetheless, this comes to us from Small Gold's website. And here's an article that he posted about it. There's actually a video as well, but I think the article kind of brings it sort of in a concise manner. So we'll kind of go through this and discuss it a bit. He mentions that tax cuts and or debt creation can create temporary liquidity and a wealth effect. China's wealth and increased gold consumption are based on an improved economy and broader societal wealth. A wealth effect could drive gold and silver demand, but not necessarily investment gold and silver sales. Here's how. The conventional wisdom is that the prices of gold and silver will rise when there is hyperinflation, political uncertainty, or a financial crisis. These are all scenarios in which historically the prices for gold and silver have risen. There is, however, another scenario in which demand for gold and silver rise, as well as the price during an economic boom. The number one segment for demand for gold is jewelry. Over one half of annual gold demand comes from jewelry. Jewelry demand is twice the size as investment demand for gold. And yes, and that really makes a lot of sense, especially considering the cultural significance in places like India and China. Industrial demand for silver is the number one segment for demand. Silver demand for jewelry and silverware, however, is twice the size as demand for investment silver. 260 million ounces a year versus 130 million ounces in 2017, according to the Silver Institute. The purchase of lower-end silver jewelry requires disposable income, and higher-end gold jewelry a certain level of wealth. China and India, the increases in demand for physical gold and silver that are providing a floor on the price are coming from those two countries. These countries have rising wages and rising numbers of people that can afford a gold and silver today. 25 years ago, the consumer demand in China and India was far lower due to their economies still being far from emerging. According to the U.S. Mint, American Gold and Silver Eagle sales, physical precious metals investment demand in the West is down 80% plus since 2015. Part of the reason for the decline may be a fear of economic collapse has subsided, and wages are not rising, so stackers don't have disposable income to buy. If, however, the economy were to take off, potential catalysts are detailed in the video, and I'll link to this article, by the way, in the description below, and wages were to rise, we may see an increased demand for gold and silver jewelry in the United States. That demand may be far greater than the elevated gold and silver demand we saw from 2009 to 2015. Rising physical jewelry demand in the U.S. coupled with increased demand in China and India could push prices higher. In addition, a growing economy will use more silver and gold for industry, further fueling that demand. If gold and silver stackers also see an increase in wages, they may start adding to their stacks again, adding to the demand. Now, that sentence, I'm not as so sure unless they're gold or silver bugs, but if they're casual accumulators of gold and silver, it may be one reason why they won't, according to the sentence above about people that are not as fearful because the economy is getting better. Usually people accumulate gold and silver for fear of an impending recession or economic collapse, and those fears are still there in some circles, especially here in the community, in the online community, but for others, for the vast scale, they've kind of subsided, so I don't know that that would exactly happen. However, as far as the overall general consensus about prices going up, it has happened before. And Small Gold lays out here based off the GDP. Now, gold rose from $300 an ounce in 1985 to $500 an ounce in 1988 during the Reagan boom years. And we saw the GDP here now in 84 was 7.3%, which was its highest. And gold was at $300, but then we had it kind of did creep down a little bit, but by 1988 it started to go back up over 4%. Now, in 1987 you had the saving loans crisis. You had there was some economic turmoil then, so that could have contributed to a point. But by 1988, especially, I think one other indicator other than GDP would be revenues into the Treasury. By 1988, the close of the Reagan administration, revenues had doubled into the U.S. Treasury. So, and gold had rose from about $340 an ounce in 2003 to $830 an ounce in 2007. U.S. GDP during the Bush years, we saw that in 2003 it was just below 3%, but in 2004 and 2005 it was over 3%, and the tax cuts from 2003 had an effect, and the GDP went up, but then things started to go back down. And now that's one thing to understand, that these GDP numbers, they are not published until, I guess, a couple of months later is really when you really they can analyze those numbers. So by 2007, we didn't know we were in a recession yet. And what really was, it was December 2007 when the recession hit. But we can see that going back and looking, some of these numbers are also revised after the fact. And so I think that being the case, I think this bolsters Small Gold's point that, an increased economy, especially a U.S. economy, does have effects even around the world. And in places like the Middle East, India, and China, where gold is accumulated, if you have wealth and also as a cultural significance, you are going to see as that populations explode or increase, and especially in those areas, you're going to see more demand for gold. And the demand for gold, especially in those areas, is for jewelry, and it makes more sense, and especially an industrial demand for silver. So very fascinating indeed. And here's another article that talks about high-end jewelry storage drives Bitcoin adoption with discount for crypto purchases from Small Gold. And it talks about it in a live stream, piggybacks what he was talking about as well, about all this stuff with jewelry. And speaking of jewelry, some of you may have seen a video I posted quite a while ago about how you can buy 3/9 gold or pure gold, 24 karat gold, in the form of a bracelet. And there is some premiums tied to those, but you can travel from country to country without any worry of being stopped for whatever reason. Wearable wealth is kind of what it's referred to as. And I think in some cases it might be an attractive option for some of us. Maybe a 23 karat or 24 karat ring, maybe, or something to that effect for men or women or whatever. A necklace, people wear jewelry all the time. And if that's something you're inclined to do, why not get it as an investment grade, hedging grade, I'll consider it, gold and silver. The more pure, the better. And that is the case in the Middle East, especially, where they like their gold pure. The most of their jewelry is 22 karat gold over there. You don't see the 14 karat or 18 karat as often, especially not 10 karat. So very interesting indeed. Definitely makes sense. Small Gold, thank you so much for this information. Very fascinating indeed. Post your thoughts below. What do you think? Do you think as the economy gets better, we're going to see this happen, or do you disagree with this? Post your thoughts below. I would like to extend a multitude of gratitude to y'all for watching, and encourage you to not only subscribe to this channel, but also subscribe to Small Gold, because he's posted a more in-depth and longer video on this topic. And for in-depth analysis on the markets, politics, economics, check out Small Gold's channel. And but nonetheless, thank you all again, and extend a multitude of gratitude, y'all, for watching. I encourage you to please rate, comment, and subscribe.